Hello, everyone. Welcome back to the world's best investing podcast. I just finished reviewing my Q2 2025 Rivian earnings report, and I'm seeing something, a big picture here, which I think is very relevant for Tesla, IREN, even RocketLab. Obviously, Rivian investors, something really big is happening. Look, a lot of people argue we're in a kind of bubble. And to me, the number one thing that sort of discards that is one, the fact that everyone thinks we're in a bubble. No one said that in 2021. Absolutely no one. Two, the fact that people are actually paying for AI. So it's fundamentally different to what happened in the year 2001. I wasn't there, but if you look at pets.com and stuff, it wasn't actual economic value. It was people getting very excited about the internet. Now it's different. You see people paying for new models, and you see this thing which I think is really interesting, which is graduates are having a tough time getting jobs. So if you look at the Accenture thing, the news that came out yesterday, they're firing like 10,000 people or something. It's about AI. It could be an excuse, but I have a bunch of friends that are roughly my age, a little bit less. They're struggling to find jobs. Some of the people that are in my community said, hey, a lot of my friends as well that just came out of a master's degree, say, for example, are struggling to find jobs. So what's actually happening is that AI is very real. And there's a kind of blueprint that I'm seeing across the board that's very interesting. It's basically when you have something that's impossible to do, like Tesla's vertically integrated infrastructure, IREN's a vertically integrated infrastructure, Rivian's as well, Rocket Labs. So something that's impossible to do, maniacal iteration led by some crazy founder that's just extraordinary across the board and doesn't give up, with the market sort of discounting that maybe these companies are not going to do so well. And suddenly these companies go on to print positive cash from operations, which is basically a validation of the infrastructure that this company has built. And it signals the emergence of a platform, right? So with IREN, I said the fact that they printed positive cash from operations means that all the complexity they've been dealing with and the sort of the incredibly fast scaling of the data centers and everything, it works. It's a platform. And simultaneously, you have what seems to be exponential demand for compute and sort of the combination of the two things. So basically a machine that just churns out data centers and can do so while printing cash with exponential demand on the other side of the equation. Essentially, you have this kind of infinite money glitch. With Tesla, I think we're seeing the same thing happen. Over the past few years, the price of money has gone up a lot. And so cars have become far less affordable, which has obviously dampened the financials a little bit. Elon has lost a little bit of focus with the whole political thing. He's now back. But anyways, the business has actually been gearing up to get a lot more efficient. If and when rates do come down, cars are going to become a lot more affordable. And basically what Tesla is a printer of essentially factories that make cars that are fully connected, increasingly autonomous. And so it's just bootloading a kind of AI. If you ask me, what I think IREN is doing is basically bootloading an AI that's going to be capable of printing data centers at an increasing speed, increasing efficiency. And if you look at what OpenAI has said, I think it was a few days ago, they're going to have to 125x their compute consumption. They're going to consume as much energy as India in around 8 years' time. My view is that's probably an underestimation. So long as AI scaling laws persist. Again, the whole conversation about are we in a bubble or not comes down to, are these AI scaling laws real or not? For me, it's as real as one, essentially people are spending more and more time speaking to ChatGPT, and people are not finding jobs. As Fed Chair Powell said, I think it was last week or 2 weeks ago now, we are in a low hiring, low firing environment that's driven by AI. You don't really have to fire anyone unless you're Accenture. It could be an excuse, but these guys are firing for sure. And you don't really have to hire anyone because just one really smart guy, one A player, every day he wakes up, he's going to be worth a rising number of B players. So maybe a few years ago, one A player was worth 10 B players or 20. Today, he's probably worth 50, he or she. Probably in 6 months' time, he's going to be worth a lot more just because these models are getting a lot more efficient. I see it in my course. I've trained Antonio GPT, which is basically ChatGPT 4.0, trained on my deep dives on the mental framework in my course. I see the statistics, and customers are spending more and more time talking to this model and spending less time talking to me. The productivity is very real. So we have this blueprint, which is fascinating. And I think it's going to actually create a lot of wealth. So The fundamental blueprint that I've gotten behind over the past 5 years across the board is sort of the Costco algorithm applied to network effects, basically being focused on delivering more value to customers per dollar spent by sharing economies of scale, having that unleashed network effects and sort of spinning that flywheel and creating a lot of value like that. I think this new flywheel is probably going to be bigger, faster, and it's going to be harder to disrupt. Because if you look at businesses like IREN, I mean, I could sort of conceive I could conceive mentally how to go about maybe disrupting Duolingo or a company like that. That's basically applying the Costco algorithm to network effects. You understand you have to go make an app and iterate really fast and stuff. I can't wrap my head around how one could conceivably disrupt IREN's operations or Tesla's or whatever. Now, one thing that I believe is happening, and I'm gonna say this quickly because I know that a lot of people are not interested. I shared this in the email in the newsletter today, but I think Rivian could emerge as quite a big platform here. Basically, it's a little bit like Tesla, except that the cars have a bit of a different vibe. It's kind of for millennials that have made some money and work remote kind of and like to spend time in nature and everything. So the cars have a vibe. These guys just printed positive cash from operations for the first time this quarter, and Volkswagen is already using Rivian's platform to update their cars both on the hardware and software front. So you know that OEMs, legacy OEMs like Volkswagen, Mercedes, BMW, their software basically sucks. I have a BMW X7, a new one. It's one of the cars I have down here in the garage, and the software is just crazy. They do software updates. They try to sort of do it well, but every single software update creates one kind of bug. So yesterday the roof actually wasn't closing, and you have to put the car on reverse and then hit the button to close the roof. Otherwise, it won't close. Porsches, Mercedes, stuff like that. You're not even buying them for the software right now. You buy it for the looks, the feels. The interiors are quite nice. So it happened in the 60s already. You basically had these massive manufacturers sort of rolling up smaller brands like Jeep and Ferrari. Fiat basically absorbed Ferrari. That's a great example. And so these large manufacturers acted since as platforms that give these smaller brands coherent unit economics, and sort of the rest is history. The same thing is going to happen now with software. I think Rivian is a good contender to that. I do think this market is going to tend to a winner takes all kind of scenario because it is software based. And so I do expect Tesla to take most of that market. But I believe there's going to be a number of players too. And I think Rivian is really the only company in the West that can do this. Again, super interesting that if I show you Rivian's financials side to side with IREN's, you'll see cash from operations and free cash flow per share converging just the same. It's sort of the graph declines for the past few years. Everyone sort of gives up a little bit on the company, and then all of a sudden it starts ticking up into the positive domain, which is a validation of the infrastructure. So what I think is very interesting about this blueprint is it's going to be, as I said, harder to disrupt, and it's going to accelerate very quickly because, I mean, it's per every step they take forward, it's going to be exponentially harder to disrupt than perhaps other companies that leverage purely digital flywheels like Duolingo and Spotify and so forth. You could say the same thing applies to him. So let me explain. If you want to go print one data center, that in itself is impossible to do. If you want to go and print two or three, it's going to take a long time. You're going to have to go through this process that IREN went through in order to productize your ability to print data centers. And so this is, I would say this is American Industry 2.0. That's what IREN is. That's what Tesla is. That's what Rivian seems to be evolving into. And then RocketLab, ASTS, companies like that, which are kind of a little bit further behind in terms of their financials and thus the risk-reward ratio. And so this is a new kind of industry that I do want to get behind. I'm definitely behind it on Tesla. I've been long Tesla for almost a decade now. The reason I'm not buying IREN is that a lot of the thesis rests on the viability of Bitcoin. So I understand that the founders are not Bitcoin maximalists. As soon as they mine a Bitcoin, they sell it. But I don't understand to what extent, if Bitcoin went to zero yesterday, this company could succeed or not. A lot of you guys are talking to me about this company and sort of putting forth why you think that risk has actually been reduced to zero, which I continue to study. But at the moment, I don't have a conviction there. So fascinating to see that actually, if you put Rivian and IREN side by side, it's the same blueprint. Both are now printing cash from operations. if I had to dissect the two opportunities and essentially explain why I think I'm, for the moment, more interested in IREN than in Rivian, if you break down the equation, yes, both have built a machine that prints an asset that I think is going to be invaluable to the world. So in IREN's case, it's data centers. In Rivian's case, it's basically autonomous vehicles. And at a higher level of abstraction, essentially autonomy, like Tesla. It's a kind of second internet where you send around tokens of autonomy versus just cars, as the industry has been doing to date. However, the second component of the equation, which is the demand, I'm not sure that if you were to put like 1 million Rivian cars today available for $5,000 each, I do guess that the population would snatch them up. So until we are proven wrong, it would seem that AI scaling laws are accelerating. They are very real. And so the second component of the equation, which is basically infinite demand, is particularly more true for IREN than it is for Rivian. That is why, although both correspond to the same blueprint, and I do believe that the odds of success for Rivian are going up, I am more interested in IREN, which, as I said in my last video, I think is evolving into something like a Tesla for data centers. So say, if this risk of Bitcoin going to zero and having that wreck the operation for IREN were to be reduced to zero, I think I'd be going long this company. And potentially I'd be selling some of my other positions to go long. Again, I'm not trimming the other positions because they're up a lot. I'd be selling some just because I think that this has vast potential. On the other hand, if I had to pick now, I probably wouldn't go long just any of the two, Rivian or IREN at the moment, because I do believe that both theses have blind spots. But as I said, the value, especially for today's video, and the value for me in studying Rivian deeply is understanding this blueprint is going to power American Industry 2.0, and it's going to be sort of exponentially faster than anything we've seen to date. We've seen a taste of this sort of data flywheel and what it can do in purely digital players like Duolingo and stuff that I keep talking about. But just the combination of exponential scaling with the act of disrupting these companies getting exponentially harder as they scale, I think is something that's going to be new. Interesting too, I think it was a week ago or two, that Palantir is now using Warp Speed, which is a verticalization of their digital twin platform, to speed up the manufacturing of ships in the US. So that's going to feed into all of this very nicely, because again, if you think at a higher level of abstraction, these two companies, and basically any company that corresponds to this blueprint, is just building an AI that prints these valuable assets. So RocketLab is building effectively an AI that's going to print stuff that we need for space travel and space civilization. IREN is printing data centers. Rivian is essentially printing autonomy or instances of autonomy like cars or whatever. And actually, in the earnings call, RJ Scaringe explained that they're already thinking about applications beyond just powering autonomous cars of their AI models. The knee-jerk reaction there would be to say, well, Tesla already exists, so screw these guys. But to me, it's absolutely not obvious. I think that RJ Scaringe, I hope I pronounced that well, is an extraordinary founder, and he's going to do very well. So what I'm trying to say is, even though we have established players like Tesla and stuff like that they are effectively the father of these blueprints, I think we have a number of opportunities coming online that are tremendous. The one I'm most bullish on right now is IREN. You guys know I'm not going long that, as I explained in this video, because of Bitcoin. But I'm actually quite excited about the onset of this blueprint, and I think it's going to generate tremendous wealth. So I read this quote, I think it was some months ago. It said, most very successful investors simply took one idea very seriously. For me, until now, that has been Costco algorithm applied to network effects. And I'll continue applying that for a long time, because I believe it's gonna print a lot of dividends, right? But then I think this new one is just going to be more powerful, and ultimately I think it's going to deliver a lot higher returns, right? So I would call it the Tesla algorithm. It's again doing something impossible that involves hardware and software, iterating very fast, and then printing cash, and then reinvesting it to print more instances of the infrastructure that allows you to print an asset that's just invaluable for an exponentially growing component of the economy. I guess you could say, when I did the comparison between IREN and Rivian, I guess you could say that the second component of the equation for Rivian is actually the demand for autonomy. So I guess that eventually the company will evolve in that direction. But two very, very interesting instances of how I think wealth is going to be created over the next decade. So again, I always want to talk about this, which is you guys ask me, why do you do deep dives if you already have positions that you are bullish on and have already made a lot of money on? The truth is there is no limit to how smart you can get. And every single day I come here and read and think and write and then make videos. I'm sort of expanding my view of the world. And I think that we are in an unprecedented time in human history in terms of how fast the innovation is. Combined with what I think is an extraordinary community here on YouTube and X and everything, just the amount of opportunities that you can screen is incredible. So this past week, I was thinking about stuff like perhaps liquidating some of my big positions that have done very well, like Palantir, which is up 25x, and investing it into something else. So I had a relatively crazy idea of investing the money that I've made in Palantir into IREN. So think about that. I'm actually very bullish long term for Palantir. It's a position that's worth over $2 million now, nearly $3. But just imagine putting that into IREN. And I'm sort of very close to unlocking conviction on IREN. I'm 90% of the way there. I'm just not bullish on Bitcoin. But just imagine if you could do that. It's not trimming because something has gone up. It's not, as Warren Buffett would say, cutting the flowers and watering the weeds. It's something else. It's if you continue to study businesses, because of the pace of innovation that we have now, you are likely to see high conviction opportunities which have one order of magnitude or two more long-term potential than the company that you may be holding. So just extraordinarily exciting. I try to stay cool anyway. I'm not letting the returns that I've had from the whole AI, the onset of AI get to me. I think that, of course, you always have to be wondering whether you are in a bubble or not. It's part of the job of an investor. But right now, I think that most investors, or many investors, are actually defaulting to the knee-jerk reaction, which is thinking in terms of analogies and saying, well, stocks are going up really quickly, so this must be 2001. I think we are living through an entirely different period in human history in which the innovation is directly accretive to additional value delivered to customers that they're willing to pay for. And it would seem that the value to price ratio that companies are bringing to the market actually do increase free cash flow per share levels quite quickly, as evidenced by Palantir, as evidenced by HIMSS. So when I look at IREN and Rivian, which I know many of you are going to underestimate, but I think it's a very similar instance of essentially a company that's figured out something very, very difficult, which has massive long-term potential. When I look at these two companies, I'm not absolutely discarding making an investment. So very exciting. I continue to study this hard. Tomorrow, we're doing an update on Acelera, and I can't wait to get on with RocketLab, ASTS, and these companies, which are effectively instances of this same blueprint. Over time, I'll be adding this mental model to the course, as I do. So I think I'll have to study these companies for, say, another year or two. I'd say another year, perhaps, before I include it into my course. But I think it's such a beautiful mental model that radically changes the way you look at companies. By the way, when I talk to people that are incumbents in the financial sector, like traditional analysts and stuff, they never talk in these terms. And so when they look at these companies, they're often puzzled. It's quite impressive that retail investors do understand these companies before professional, quote unquote, investors a lot of the times. And I think IREN is just a beautiful example of that, which makes me very bullish on just the whole retail environment long term. I think the combination of social media, lots of very smart people doing their own thing, it's just such a wonderful time to be doing this. So anyways, guys, thank you very much for your time. If you enjoyed this video, could you please share this with one friend whom you think will enjoy it? These deep dives and updates are for free. If you guys want to go and read my IREN update or my Rivian update, it's in my blog, which you'll find in the link in my YouTube bio or X bio. And thank you very much. Take care and see you next time.